What's up, everyone? Today is November 13th. It's a Saturday. So the market is closed today, but I decided to go ahead and make a video, not only covering the trades I took on November 12th, which was a Friday, that was yesterday, but I really wanted to make a video geared more towards psychology, the emotional aspect of trading, the psychology involved, all of that. If you go back and see the other videos on my YouTube channel, you can see the trades I've taken in the past. You can see the analysis behind them. So if you want more trade examples themselves, then just go back, look at videos on my YouTube channel in the past, hit me up on Discord, and I can help you there. But I think the biggest thing in trading, and I know I say this all the time, is psychology, the emotional aspect, how to handle your emotions. So I really wanted to make a video geared specifically to that. So I'm going to structure the video in two ways. I'm going to go over all the psychological lessons I've been picking up in the last month or month and a half. And these are very, very minor lessons which come strictly through experience. You're not going to find them through books. You're not going to find them through YouTube or Discord. It really just comes from screen time and experience. And then I'll finish off the video showing the couple of trades that I took on Friday, November 12th. So quick update on the week. I took a couple of trades. I think my win rate was around 42%. Account grew about 60%. So I did have a pretty good week, and that might be a little bit surprising to everybody. How can you grow the account 60% when having a 42% win rate? I know it sounds I know it doesn't sound possible, but again, I'm going to go over the psychology of R to R, win rate, confirmations, style, consistency, and all of that. So let's go ahead and start the video. So the first and probably one of the most important things I want to go over is risk to reward and win rate. So I had somebody, or I saw somebody on Discord post that they had a 72% win rate last week, and they ended the week red. So that means despite being right 72% of the time, they still lost money. And all that means is, their risk to reward is it's not sustainable. So if you are risking, for example, $500 to only make $250, if you're right 50% of the time, you are not going to be profitable. So for everybody, who visualizes math, if I take 10 trades and I invest about $8,000 in each trade, and I'm risking 500 to only make 250, and I'm right on 5 of those trades, then I make a total of 1,250. But then on the losing side, I lose 2,500. So in total, I lose 1,250. So even if my win rate was like 60-70% with the risk to reward of 0.5 to 1, meaning or whatever, reward to risk of 0.5 to 1, if I'm risking more than I'm willing to make, then that is not going to be sustainable in trading. I'm saying it right now. It's very, very tough to have a low R to R despite having a high win rate. So now imagine there's a trader who has a 40 or maybe even like a 35% win rate. So they are only right about 40% of the time. Let's say that they take say that they take 10 trades, they lose on 4 of them. No, my bad. They lose on 6 of them and they win on 4 of them because they have a 40% win rate. And let's say that they invest 1,000 in each trade, and they have a risk to reward of 3 to 1, or reward to risk of 3 to 1. So for every let's say $250 that they risk, they are willing to make 750. So then 750 times 4 is, sorry, I'm doing math on the fly, 3K on the winning side, and then on the losing side they lost 250 6 times. So what is that? So that means despite having a 40% win rate with a 3 to 1 risk to reward, they ended the week up 1,500. So this really goes into the first point. R to R and win rate is crucial to understand, the relationship between them. Typically, you want to strive for a low, what do you call it? No, not a low. You want to strive for a high R to R with a medium win rate. And a medium win rate kind of like establishes that not every trade is going to work out. And that's a fact which a lot of new traders have a hard time understanding. Um, for some reason, a lot of new traders, I was in a position once, thought that, you have to win on every single trade to be profitable in the market, and that's simply not the case. Just because there are too many variables in the market. There's too many market makers, there's too many algorithms, there's too many people with their own analysis, trading in different ways. So for you to say that your analysis is going to be right 100% of the time is strictly false. It's just not possible because if something is composed of infinite variables, you cannot be right 100% of the time. So accepting that you're not going to be right all the time is needed to be consistently profitable. And the way to combat that is then again having that tight risk and big reward. And I'm gonna give specific examples of risk to reward and win rate later on in the video when I cover the trades I took on November 12th. But I kind of just wanted to, state that the relationship between risk to reward and win rate and how they interchange. Okay. So the next thing I want to go over, this kind of goes into breakout versus pullback strategies, but not really. I really want to go over the relationship between confirmations and premium. So what essentially I'm trying to say that if you have more confirmations, you're inevitably going to be paying a higher price. So I'll give you an example of this. Let's go to Baba. So this is let me go to 5 minute. I do trade on both the 1 and 5, so I know a lot of people strictly trade on 5, so I'll use 5. But let's say that I entered a trade down here. Let's say theoretically I timed the bottom of Baba. We were in 4-hour demand. Again, if you don't know what demand and supply is, check out the other videos on my YouTube channel, or Carmine and Dylan have a very, very good platform to teach you supply and demand. But essentially, let's say that we have 4-hour demand here. There are buyers factored in right here. So my plan is to enter in this demand zone. So say I enter right here when there's really no confirmation, when it's just red candles in. So in this case, I barely have any confirmations. Maybe I have 4-hour demand, maybe I have a small lower wick. Volume isn't telling too much here. So let's say I enter here, I'm paying a very, very cheap price. So say theoretically, I pay $1 per contract. I'll just write that down, $1 per contract, and I have 2 confirmations, which is this lower wick and demand. So now say that Baba moves higher. So entering here at around 164. Now say Baba moves higher from this demand. Volume is coming in. You have green candles pushing out of this demand zone. So say I enter right here. So red will be the first theoretical entry, and let's go with I don't know. Let's see the first color which pops up. Let's go with blue. So blue is the second entry. So here, say the price of the premium is 150. Because if you're going long on the stock, then as the stock moves higher, you're going to be paying a higher price. That's how calls and puts work. So I'm paying a higher price here. But in this case, I have 4 confirmations. So now imagine the price of Baba pulls back, right? You have to figure out where would your stop loss be. If you had entered on the first exit, if you had entered on the first entry, you would be fine. You would still be up in profit. But if you had entered all the way up here, then as we pull back, you might get scared. You might think that, oh, my premiums are dropping, even though the confirmations did make sense. I might have to stop out. So there's not too much to understand here. I really just want to go over, the relationship between risk. My bad. I really want to go over the relationship between confirmations and paying a higher premium price. And it's really, really important to understand that, because if you are paying a higher price and you have more confirmations, maybe you need to keep your risk a little bit tighter, because you didn't get the first perfect entry down here. So you understand that pullbacks may be necessary. And say you're taking a breakout play right here. Now you have several confirmations. We're breaking high of day. We have good volume. We're bouncing from demand. But then you have to keep in mind, Baba already moved from this demand zone? How much higher can we move up? So it's very understandable. It's very important to understand where other participants are placed. Um, just be aware that if you are paying a higher price, or just be aware that if you do have more confirmations, you are going to be paying a higher price. And there are people who have entered before you. There are people who entered maybe with lower confirmations, but they did get a much better price. So it's really, really important to understand where different buyers and where different sellers are placed in the market, where to put your stop loss accordingly, et cetera, et cetera. So that was kind of the second point. If that is a little bit confusing, just rewatch it or hit me up on Discord or YouTube. I might be able to explain it a little bit better. I don't want this video to go on for too long, 10 minutes. Okay, so the third thing is, just being an independent trader. And this might sound a little bit weird to you. What does being an independent trader mean? It really just means trusting your own analysis, doing the analysis on your own, coming up with the plans on your own, executing on your own, not following alerts. And the reason why alerts are just not sustainable because one, you really don't learn anything. Two, I think it's proven that alert discourse just don't work, like probability wise. But being an independent trader allows you to, do the analysis on your own without the help of others. It's always good to trade with other people, factor in their ideas, their thought processes. But the main thing is, doing the analysis on your own allows you to come up with your own game plan, and it allows you to be consistently profitable without the help of others. And I think that's the end goal for serious traders who are looking to make a living out of this. So being an independent trader, creating your own style kind of goes alongside with that. We have all the skills, we understand technical analysis. Um, just draw some stuff out. We understand levels right here, high of day, low of day. We understand technical analysis. We understand volume analysis. For those who use indicators, you probably know how the indicators work. We understand supply and demand. We understand price imbalances. So what I'm trying to say is, we understand how the market operates, from a higher time frame all the way down to a lower time frame. So now the most important thing is, creating your own style based off of, all different forms of analysis. So a quick example of that is, Dylan. Dylan is more of a trend trader. He's a little bit more patient with his trades. If he takes key level breakouts, he may be in the trade longer than I am. Me personally, I have more of a go quick or get out mentality. If the trade doesn't go right away, I'm out almost instantly. I can always re-enter. If the trade is working out in my favor, then I will follow Dylan's scale out method. I will slowly scale towards like a final target, which could be supply or another key level. But it's very, very important to understand that no two traders are the same. Have to be an independent trader. And the most important thing is creating your own style based off of all of your own analysis. And it's not a style set in stone. You keep on adding, you keep on adding to it, you keep on tweaking it. But just being an independent trader. And finally, the last thing, or one of the most important things I want to go over is consistency. So you have to figure out what your end goal in trading is. And for me, that is being like consistently profitable trader. Pretty much there. I'm almost there. There's a couple of minor things I need to work on, but the end goal is consistency. And just because you're consistently profitable for a year or year and a half, it doesn't guarantee that you will be consistent for the rest of your life. You have to keep on learning. You have to keep on putting in the work. You have to keep on leveling up your psychological game, working on yourself outside of trading. But the end goal for me is consistency and not focusing on the money. And the reason for that is because if I stay consistent in my trades, if I follow a proven game plan which will work time and time again in the future, then I know money will follow it. I do not have to worry about the money at all because I know the way I trade will consistently make me money in the long run. So if you didn't hear that, just go back and rehear what I just said, because it's very, very important to understand that the end goal should be consistency and not money. And this kind of leads into my bad. This kind of leads into the three types of trades or trade results a trade should follow. And those are a big win, a small win, or a small loss. So you can categorize small win and small loss into a break-even trade. But what I'm trying to say is you should never ever take a big losing trade. And if you do take a big losing trade, The only reason why is because your reward was so much greater than what you were planning to risk. So now I'm gonna go in and explain, the the couple of trades I took November 12th or Friday and give you clear examples of each type of results because I did take small losers, I did take small winners, and I did take big winners. But because my risk was super tight, because I was able to capitalize on at least one big win, I ended the day up, $300. I ended the week up about a grand. Okay, but let's get started. So first trade I took was on Blink. Again, I will show you the analysis from the higher time frame. So everybody knows that EVs caught momentum. Rivian IPO'd, Amazon's also moving higher, Lucid. So the entire EV sector is kind of like booming now. And how do I know this? Well, look at the volume on November 8th. Over 17 million shares were traded, while in the past couple of months, we had nowhere near this type of volume. So what I saw off the open on Blink was, a big gap up, and I saw us gapping up to not only this prior day high area where there was a lot of volume and interest, but I also saw us gapping up to this $40 area. So both of those things combined, with no supply for another like $3 or $4, my plan was to take a breakout of 40 with the final target of 43. So that's the analysis on the higher time frame. Actually, what I'll do is I will go through the analysis of every stock I traded on a higher time frame, and then work my way down to a 1 minute. So which stock I took was Amazon. So why did I like Amazon? I was actually looking at Amazon towards the downside. If I go to a 1 hour chart, you can see that Amazon had this critical level right here, several touches, 1, 2, 3. Top of that, it was forming a head and shoulders pattern with no demand until 3390. So my plan was to take a breakout of this, with the final target of 3390. Obviously didn't get there, but I did capitalize on this trade, and this did pay nicely because it was Friday. Last but not least, I took DoorDash. Again, beautiful trade. I missed the majority of this move. I only caught a small piece of it. Reason why is because one of my golden rules is, if I do take scale outs into profit, I always need to set the remaining ones at break even. And my runners eventually got hit at break even, had to stop out. But this was a fantastic move. Congrats to everybody who caught it. But essentially, the entire story with DoorDash is we were kind of chopping around, and then earnings came out. We had really good earnings. We were gapping up into this prior resistance area on a 1 hour time frame. Right here, you can see we have several touches. We had no supply above 2, so my plan was to take a breakout of this level, just targeting each psychological whole dollar above. So now let's go ahead and I will show you clear examples of small winners, small losers, and big winners. So my first trade was on Blink. This happened way too quick off the open. My goal or my plan was to take a breakout of 40. Fortunately, we gapped above it. We did have prior day high here. So essentially what happened is I entered somewhere around here. Let me remove this for you. Okay, so I know you can't see it too clearly, but I did enter right here, this red arrow just poking its head out. But what I saw is, Friday off the open is very volatile. Everybody knows that. What I saw is that, Blink was moving slightly higher, but the contracts were actually staying stagnant or losing value slightly. So whenever I see that, especially knowing it's a Friday, I will tend to get out 9 out of 10 times because I know a slight pullback even on a 1 minute chart will destroy my premiums. So as soon as I entered, I saw us push higher, but the contracts not gain any value. This should have moved more than I expected because it was a Friday, but I ended up exiting 15 seconds after I entered. I gave it the chance. It just unfortunately did not move how I wanted it to move. So I think I entered 5 contracts at $2, and then I stopped out of all 5 contracts at 1.9. So I took a 10-cent loss per contract. I lost $50 on this trade, probably around $60 including commissions. So just keep that in mind. I lost $60 on around $50 on a 1K investment. So I probably lost 5% of the trade. which is really nothing. Now let's go over to DoorDash. So DoorDash was an example of a small winner. And yes, this was also off the open. As soon as I exited Blink, I saw DoorDash set up. Essentially, we were moving into that, resistance area. So what my plan was to, take a break out of this. So as soon as we crossed it, entered full size, we pushed up. My contracts were up very, very nicely. So I scaled, I think, 2/3 of my position right here. And I had 1/3 of my position to, potentially capitalize on this entire move. However, when we pulled back to the resistance level, I wanted us to hold, but then because it's a Friday, because contracts are super, super volatile, if you do trade DoorDash a lot, you know that the spreads tend to open up when we pull back. So just to play it safe, I saw my contracts go below my entry point actually. So unfortunately, I had to stop out. Maybe if this was a Monday, maybe if this was a Tuesday or even a Wednesday, I would have held on just to see this resistance level hold. Or it was a Friday. I didn't want to play games. So I ended up stopping out of the last 1/3 of my position for break even or small loss. But overall on this trade, I think I netted around maybe like 150, 125. So keep in mind that 2/3 of my position here, which I scaled into profit, was enough to cover the loss I took on Bling. And the reason for that is because maybe on DoorDash, if this didn't go right away, if this pulled back, then I would have exited for a very, very small loss. So again, what I'm trying to say is win rate does not matter to me. What matters to me is risk to reward. This was another trade on Dash, and then top it off, I took Amazon. I really, really wanted to catch this original move to the downside. I was watching this. However, I was in what do you call it? I was in DoorDash at the time, so unfortunately, I was unable to capitalize on this move right here. But this is a Friday. This is Amazon. These contracts were up 200% in like 2-3 minutes, which is a fantastic move. So congrats if you caught this. However, I was patient. My plan now was to either wait for some sort of flag pattern and continuation towards the downside, or maybe a potential retest of this 3471 level. So I had plans for multiple scenarios, and then one of my plans hit. So putting emotions aside, whenever my plan hits, I'm going to take the trade. I'm going to put on the risk. If it doesn't go away, if it doesn't go right away, I will stop out for the loss. And if it goes right away, then I am nicely in profit. But essentially, I saw us move higher. I wanted sellers to defend this level. That's exactly what sellers did. So as we came back down towards the level, I entered full size here, chopped around for a minute, and then this candle, made my entire week. This is, like a $5-6 candle on Amazon. It's a Friday too. Contracts at this point were up 40 to 50%. So my original target was low of day. I only played one contract because Amazon is super expensive. It was a contract. It was like a 4-figure contract, so it was really expensive. But I wanted Amazon to hit low of day here. Unfortunately, it did not. So as soon as I saw buying pressure, I stopped out somewhere around here. So again, go show you green and red. Green for entries, red for exits. So this right here was a nice win. I think this trade itself netted me like probably like 300, $400. So that's about like 30% on the contracts. So overall, I ended the day up like 300 something or 400. Not too sure. But the main thing I'm trying to emphasize is look at this reward I caught and look at the risk on a losing trade, right? So losing trades do not affect me at all. I know losing trades are part of the game, but if I am in a losing trade, I accept that right away and I exit for the loss. And then when I'm in a winning trade, when my analysis is correct, I let my winners ride. If I played multiple contracts of Amazon and this decided to continue lower, then my second scale out could have been here. My third scale out could have been all the way at 2-hour demand. So that is, the entirety of the video. Kind of want to end this off with saying that you can never ever predict where the stock is going to head. All you can do is, put your risk on the table, let your money work for you, and trade with a proven system, because no one can ever predict where the stock is heading. I don't care if you're an institution. I don't care if you're a retail trader. I don't care if you have cheddar flow or some sort of option flow. In the short term, you will never be able to predict what stock moves because one, there are too many people trading, and two, there are too many variables to consider. So the best thing to do is, put your risk on the table, trade with a proven strategy, and leave emotions out of the game. But I am gonna end the video here. It is a pretty long video. It's 25 minutes, but I do think this is one of my best videos in terms of psychology and analysis. So I hope you guys found some value out of this. As always, if you have any questions, just hit me up on Discord, hit me up on YouTube, and if you like it, please leave a like and subscribe.